Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Friday. What a week. I tell you what, yesterday was wild. We got lots of snow too, man. If you're out east and you haven't gotten the snow yet, look out. This storm is like the real effing deal. You're going to remember this one for a while. Let's come and see what the markets are doing here before we get to the PPI. So, after the PPI, of course, we got slammed down by PPI, but then like late in the day after the PPI, and I don't know if this was because of the Fed speak or what, but we just kind of magically rose back to where we were, a little bit higher in the overnight session. Here in the S&P 500, they were able to recover a lot of the losses, but they're struggling, I think. I'm a little concerned for equities here because I'm just seeing a lot of things that look to me recessionary. Then we come over into oil here. Oil taking another jump higher. The administration, the US and the UK, are now hitting targets in Yemen. So, yeah, the risk premium coming up there. And that oil is, I do not envy you oil traders right now because that is some wild movement. Gold and silver. Gold and silver moving up a little bit, just a little bit. Copper maybe stabilizing at the 3.78 area. The dollar's had some movement in here, but it's been pretty narrow, right? I kind of have to come in here a little bit. And then Bitcoin rising on the day of the ETF as anticipated, not as far as I thought maybe they might get, and it's kind of settled. Some people have been treating it like, oh, it's sold off, but I don't think it's over yet. Like, give it a few weeks. I think that overall you will probably see a little bit more money come into Bitcoin. You can't price in these sorts of things, right? The flow will come no matter what. So, yeah, it's a Bitcoin. Coming back over to here. So the news that we're looking at here this morning is US PPI. Core PPI month over month, they're looking for a reading of spot 2 with a previous reading of 0. So, a reading higher than spot 2 would probably be concerning for the markets. They are a little concerned because the problem is if the Federal Reserve starts to get squeezed, right? So keep your seatbelts on. I don't think that it'll be like this news will be like a huge deal, but there's always that risk. So, all right. So I have a little bit of food I'm gonna eat here while we wait. We got 2 minutes. Also, good morning, Dom Tactical and GWE guys. You're here right at the beginning every day. Kudos to you. So I'm just hearing over the news squawk, the Houthis are saying that a response is imminent. What are they going to do, man? Gosh, this stuff could get wild real quick. 30 seconds. Financial Juice is running a 92% discount, by the way. Check them out. Link in the video description. Here we go. Okay. Okay, so it sounds like it's lower than forecast. Ah, yes, PPI month over month is 0 versus the expected spot 2, so that is a buy. Actually, a little bit more gentle than I thought it would be. Question is, how much upside can we get here from this? Cool. Come on. Cool. I'm gonna let that run for a little bit. Curious to see if they run. So the high from yesterday was 16.5. So kind of looked to me like a big boy got frustrated and just bought it in there because it went up 4 ticks. Just boom, 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 boom. Okay. A little better. YouTube stopped ad blockers and it's been so annoying dealing with the long ads. If you want me to put an insert an ad right now, we could do that if that helps you. Does Brave browser prevent it? I mean, look, YouTube has to make money some way. And the problem is, if you all use the ad blockers, then that just means they have to show more ads to everybody that doesn't, right? So I fully support having ad blockers because there is a lot of like spyware, and for a long time there was stuff being put in ads that would be harmful to your computer. No, just browsing regular websites. But I don't think that it should be used on YouTube. Just me. Okay. 8,000 at 15, huh? Well, I guess I got to take one off right there. We know Loki uses it. No, I totally don't use it on YouTube. I don't think I use it on YouTube. Well, I have shields up. But I still see ads. I see ads on YouTube. So they are quite annoying. Like, YouTube ads have gotten more annoying over the past, like, since the pandemic, right? It's like they're not making as much money and they're trying to make up for it by making the ads more annoying. Yeah, Opera GX. There's another browser that's supposedly faster now, but I think that it's not as feature rich, and I don't think that it would necessarily have ad blockers, for instance. So before this news, we had ECB's Lane talking about, we're not even thinking about rate cuts right now. And then the news came out, and expectations for rate cuts from the ECB have gone up now. I don't know, guys. I'm starting to feel... Does anybody else feel like this? I'm starting to feel like they're trying to gaslight me on the economy. That's how I feel. Because, for instance, there was a story that said that 38% of businesses expect to do layoffs in 2024, and they cited a recession as their reasoning as to why they expected to do layoffs. How can businesses, how can you be getting that kind of result from a survey for businesses, and then the economy is fine? Makes zero sense to me. And a lot of other leading indicators, M2 continues to just plummet. We are seeing stress in the banking sector, not in the big banks, but in the small regional banks, which is why the market kind of expects that they're going to do rate cuts. You get like some of these indications, like how much stuff is being shipped by trucking companies, etc., etc. Like what it looks like to me is that the economy is heading towards a recession, and Christmas just kind of provided a temporary bump as like a last hurrah. But now after that, everybody's pulling back on spending, because every kind of little thing that I look at, like from the daily life, not necessarily the economic numbers, suggests that we're going into a soft spot. And like, that doesn't mean that we're going to go into a recession, but I am pretty convinced at this point that we are going into a soft, right? So it might not be like negative GDP, but we're not going to grow as well as we did in the third quarter of 2023. We're just not, right? Stagflation would count as a recession. That one remains to be seen. If we go into a full-on recession, I think that there's a good chance that you actually see straight up deflation in some markets. Right? Like, we're going into a soft spot. So, like, that doesn't necessarily mean that we're going to have a recession, but for people to be coming out and saying, like, the chances of a recession are super, super low and all this sort of stuff is just absolutely ridiculous to me. Especially after that, you know, all of their stupid models were pricing that there would be a recession in 2023 and it didn't happen. Which, at the time, we kind of called, like, I don't think that those models are very likely to be very correct, you know, in these circumstances. You notice, I think it's so funny when I read on Reddit and so forth, because the reaction that I'm always getting is like, it happened before, so it will happen in the future. Like, they're always like, you know, these people are saying, you know, the yield curve is inverted and that always happens before a recession, so the future always rhymes. It's going to happen again, right? There's so freaking many creators talking about that. Part of it was because that one's triggering to me, partly because they were saying that it was going to go into recession when COVID hit. And I think if COVID had not happened, that we would not have had a recession, that we would have just stayed inverted for a really long time. Given the current economic environment, the inverting yield curve is not actually the kind of like signal that people think it is. And I say, like, one of the least effective arguments you can use against me is like the past history. Like, this thing has happened X times in the past, where there's an X% chance it's going to happen in the past, so that means it's going to happen again. Worst argument you can use on me. I look at what is the current situation and what is likely to be the outcome based on the current situation, the things that we can accurately predict. Because a lot of these other things are correlations that might just be random. You know, like, they don't know why an inverted yield curve predicts a recession. And that kind of tells you that they might not know when the indicator is going to fail on them. CGW says, I'm here to say recession chances are non-existent. I just think that's so a ridiculous thing to say. I don't think he actually believes that. I think he's just providing me fodder to keep me going, right? I don't see how anybody can say the Federal Reserve is cutting interest rates right now, but there's no risk of a recession. Okay? Because this is always, let me tell you what, guys. I am only 38 years old, okay? So I haven't been around as long as somebody like Larry Kudlow. Like, go and ask Larry Kudlow about this sort of a thing, okay? But I've been watching the news since I was a little kid. My parents watched the news. That was the only thing that was on. I knew what was going on even when I was 5, okay? I can remember watching the economic news when I was 5 and people complaining about the recession in the 80s and talking about how the changes that Reagan made was like I watched all of that, okay? There was still people on television complaining about the economy. I remember before school, because the only thing that was on before school was Good Morning America or the Today Show, right? They kind of switched because there was a point where the news stations in Utah switched between NBC and ABC. Anyways, I would always watch Good Morning America, and usually there would be like some big interview at the beginning where some congressman would argue about whatever the top political issue was at the time, right? So I'd always get to see that on the Today Show. Okay. Even in the 90s, when we had like this amazing economy and everything, there was people complaining about the economy. Okay. And there was always people that were in the administration or in the party in power trying to say that the economy is really super good, right? And in particular, when we had recessions, and I remember this especially going into the 2008 crisis, it was like, hey, the Federal Reserve is cutting interest rates. We're starting to see financial market stress. We could have a recession here. And everybody said, nah, it's not. We're going into a soft spot, but we're not going to have a recession. We're not going to have a recession. Why are they cutting interest rates? Huh? You can't cut interest rates unless you're seeing economic weakness. It just doesn't work. So you cannot say, I really feel like it's gaslighting to say there's like no chance of a recession in 2024, even though like we're cutting interest rates right now. Like, okay. I'm not 50. They say that like when you're like 30, you're actually like 24, and then when you're 35, you're actually like 50. Well, not if you stay in shape, but come on. If anything, what the word for literally teetering on the edge of true legal recession, but they will act like it never passes, probably. Well, yeah, we were definitely on the edge of, listen, I don't think that the technical definition of a recession is really matters as much as it did. For the purposes of things like economic policy and data science. So if you're use the technical definition of a recession, which is that there's a board that determines that there's a recession, and it usually is 2 quarters of negative GDP growth, but where they define as a quarter is a little bit different from what everybody else defines as a quarter. Okay. If you use their definition, we had a recession in 2008 and we had a recession during the pandemic, and then that was it. Okay. But I would argue that when you're doing the data science and like testing your strategies and everything like that, that there was like 3 recessions between 2008 and COVID, because there was the 2008 crisis, and then there was the Euro debt crisis. Then there was a taper tantrum, which was when they kind of started to pull back on the economic stimulus before Donald Trump got elected. So 2016 essentially. during the summer of 2016, they were throwing a real fit because of a taper tantrum is what they called it. And then during Trump's presidency, we had the trade war. And those were all, from everything that I saw sitting here in the markets and watching all of the data, those were bear markets, essentially. And it just never got to like 2 quarters of negative GDP growth. But I still think that they should count. I think that in the era of like excessive monetary stimulus and people printing money around the world constantly and high debt levels, that you don't get the same kind of like recession. You don't get like a full-on recession. Under normal circumstances, every one of those things would have been a real recession. Right? So now you come back to, 2022. Was that a recession? Well, you did get 2 quarters of negative GDP growth, but they're not going to call it a recession, because if you change which the quarters are, then you only got 1 quarter of negative GDP growth. But under any other normal circumstances where we weren't like printing money up the wazoo and everything, that probably would have been a recession too. But the issue now is we are full on tightening the money supply. Look at M2 money supply. It's just plummeting and suggests to me that there's more to go. There's more to go. Right? Believe we're among a generational populism surge? Well, sure. But then you have to get into like, what is populism and how will that shift? I think, I think a lot of populism is really actually better described as anti-globalism. And essentially what happened during the COVID crisis is anti-globalism won. Anti-globalism won. The world is getting less connected, actually. And what we're seeing in Biden's presidency is the consequences of that. And we'll see how far it goes. But like, disrupted trade in the Red Sea, for instance, that is a prime example of the sort of thing that elites, people in charge of countries, have been concerned about, and is why they have kind of started to pull back and try and make themselves more independent. That we have more of the manufacturing over here. And this is why I continue to insist on staying in rare earth resources, despite them continuing to fuck me over. So they did like they sold shares. They just diluted us. Like, it was up well over $1. Probably, I probably could have taken like temporary profits, but I'm like, I'm gonna stay in it. And then they diluted everybody again, so it's right back to where I started. Right, but the United States is going to have to be able to procure and refine their own rare earth minerals in the future. In the next 50 years, it's going to have to happen. Deglobalization, right? Well, okay. You're saying that populism is because of the money printing that's going on? I don't agree with that, actually. So first of all, there definitely are a lot of people that are upset about money printing, okay? And like, the money printing, I would say, it is not necessarily good for the average person, right? Like, it's good to prevent the economy from imploding. Okay, so it's good for you in that respect. But the money printing, and with the way that central bank policy works, that money goes to banks, essentially. And they just use that money to make more profits in the market. And so if you're not in the financial system or tech, like high growth, okay, tech, they benefit from it because you get the low interest rates and they can just spend all of this money to try and grow. Right. So if you're not in finance or tech, then it doesn't really benefit you. and you just kind of continue to struggle, where the people in the finance and tech sectors, which is where I've worked, do really well. But again, you can't let the economy, you'd be worse off if they just let the economy go into a recession. Okay. I think that the populism has a lot more to do with the way that legislation has been working in modern society. So basically what happened was in the post-World War II kind of time period. So between 1950 and 1980, that 20-30 year time period, there was a lot of change and a lot of legislative change, right? And we moved from the modern age into the information age. And the issue in the information age has been that policy simply cannot keep up with the change in the world. The information is so much, and the changes are so much, and the systems are so complicated that we can't sort them out, because it takes legislative systems years and years and years to figure out and then kind of get everybody behind a solution so that we can change it, especially here in the United States, because the thing has always been in the United States that the Senate is really closely divided. And in order for something to pass through the Senate, the senators who are very conservative on policy anyways, really have to be convinced that it's the correct thing to do. Right? And instead, we're in this information world where everybody disagrees on really vehemently on what needs to happen. The world is changing around us so quickly, and everybody is involved. It used to be that, the senator would look at it and make his decision. Now, everybody's looking at it and making their decision and telling the senator what they want and holding his feet to the fire. And the result is that, they just don't do anything. Congress just doesn't do anything, right? And corporations have taken advantage of it. They really have. I do not believe, this is where it gets weird for me, because I'm conservative and I'm a Republican, but there are a lot of these issues that I think the Republicans are just digging their head in the sand. I'm not in favor of unions per se. I think that there needs to be reform to how unions are done in the United States, because otherwise they become their own problem and power center unto themselves. But I don't think that worker protections are I think they've fallen behind. This whole switch to the gig economy, for instance, its companies are taking advantage of people. Its companies are taking advantage of people. YouTube does not pay people what they probably should be, which is crazy to think about. There's all these YouTubers that have made millions of dollars. Yeah, but that's the top 1%. There's this whole other group of people that I would say bigger than me, but let's say between 20,000 and up, that should be they should be able to make a living and a good living on it. And they can't. Because YouTube takes too much. And it's across the board. It's insane to me. It's absolutely insane. You can go on TikTok and you can literally get 7 million views or whatever, and it's only worth a few $100. Crazy. Right? We're making the content. We're doing all the work. All you're doing is providing the infrastructure. We make all of the content for the platform, and they don't pay them crap. Right? So the Biden administration is putting out a rule that kind of redefines things so that there's limits on whether somebody can be a contracted worker. I think it's actually a good idea. I don't know if the very specific rules that they have are necessarily going to be good and correct, but I kind of think that Uber drivers are maybe actually employees. Or if you do enough of it, you should be an employee. Is Rumble better? I have no interest in. Oh, Rumble is the Asian TikTok, isn't it? No. Rumble is the YouTube. You know what? I've kind of messed around with Rumble, but I don't think that it's really a competing platform. But the problem over there is kind of more that like the content that you get over there just sucks. There's no M2 supply cut. So we've been declining. Actually, I think if you go to what is it? Maybe we want to look at M3. Red Zero Hedge had a really great M3. You can see it a little bit more dramatically, but like that's like one of the biggest drops in M2 ever. And money supply is one of the best predictive leading indicators of recession. Okay. Now you have to go. Yeah, equities are looking pretty good here. I think that PPI report was really good. I don't know if treasuries are going to come back up here to these highs. I'm glad I took the one contract off where I did. Politicians won't finance spending, rising taxes. I don't know about that. They're really in on it, but like this is the thing that drives me absolutely crazy, man. Okay, is like Democrats have it correct on certain things. Like they are seeing that corporations and like insider shareholders are taking a larger percentage of the cut than ever before. And that's where, you know, money that normally would have been spent on your career is going. It just is. Okay. But so then what do? They say the solution for this is to raise taxes on the rich. Well, they're making too much money, so we need to tax them. You kidding me? This is like, what if somebody knocked on your door and they said, "Hey, this guy across the street, somebody, you know, broke into their house and stole a bunch of stuff and broke their legs. So I just wanted to let you know, like, there is some theft and violence going around in the neighborhood. But if you pay me $100 a month, I'll protect you." Huh? Okay, if that happened, what would you be thinking? Right? I'd be thinking, let's move. Right? Or you be like those Mexican farmers, you all gang up and go and take out the gang. But right, it's a racket. Congress is basically saying, these corporations, they're taking advantage of the system. We'll let you continue to take advantage of it as long as you give us a cut. That's what they're saying. That's what the Democrat Party is doing, man. They're not changing it. They're not like changing the system so that enables them to take such a large cut of the pie in the first place. They're just going to take it after the fact. They're not going to give you anything. They just want their cut. So like that's where populism comes from. That's where it's coming from. And the funny thing is that the politicians have been really crafty and really effective at preventing the public from kind of blaming them. Like, the public doesn't like them, but the conversation continues to not be on Congress. Like, you need to make structural changes. Like, there needs to be laws about, like, in my opinion, I think I would do it this way because this is the way that it used to be, for one, and it's just simple. But I think no share buybacks. No share buybacks. You want to give money back to your investors, you have a dividend. And there's strict rules, like there's pretty strict rules with the banks about whether or not you can offer a dividend. I think those, similar rules should apply to everybody. You shouldn't be able to go in and just take out massive amounts of debt and then offer a dividend so that your stock price goes up, right? It's crazy. It's crazy. It's manipulating your own stock. And it's creating a distorted market, and it's bad for society. Well, like it's resulting in malinvestment. Period. Right. So that would be a structural change that you would make. And I also think, slightly more controversial, I also think that executive compensation should be required to be more long-term, right? So, like, if you're going to give them, like, compensation in the form of shares and options and so forth, those need to be shares and options where they only make money if the company, it does well and grows over a 5 to 10 year period. We need to get away from this. We're going to do something just so that the stock does well in this one quarter so that my options expire in the money and I make money, right? So they're sucking, they're sucking the capital out of the system and, like, not putting it where it's useful. You noticed how, like, when you were a kid, they were saying, there's going to be this thing where, like, innovation just keeps increasing and it'll be like exponential. But has it actually been exponential? Actually, no. It's kind of, over the last 5 to 10 years, it's kind of slowed down, hasn't it? It's because we're not allocating capital very effectively anymore. Needs to be structural changes. And it shouldn't be like the sort of crap that the far left wants, where it's like, okay, so we're just going to take down the whole system and do anything bad that's bad for corporations, to punish them. And yet, no. We're going to study the system, understand it very, very well, and make a change that we feel is good for everybody. Well, the money supply increased, sure. But it's declining now. Yield curve disinverts after cool PPI. So they did steepen off of that. Why excessively? I probably should have taken a trade over here in the micros, but I think I would have been too late. Maybe I would have made $10. I think, I haven't taken any trades this week. I think I'm okay. But I do definitely want to take a few trades next week, though. So don't let me get away with that. Not taking any trades next week. We also need to make structural changes to Congress so that they cannot run a deficit. Zero Hedge asks, why are hottest year ever headlines spiking right before a polar vortex? Because it actually is overall a hot year, because it's an El Nino year. We learn history to grow and not to make the same mistakes, but instead all we do is go and watch the same morons make the same horrible mistakes again, economy-wise, etc. Right. Well, here's why I think that happens. Is so Republicans, for instance, this is a sentiment that I hear a lot of Republicans say that I vehemently disagree with. Okay, they think we just need to get the right guy in office to clean things up, right? We need to clean up Washington, and Donald Trump is the guy to do it. He's the only one that will do it, etc. Right? No. I saw another thing where they were saying, this one person on the left was saying, there are these people that they exert power over other people, and then there's these people that are just victims the whole time, right? And I don't remember why they were talking about it, but I was thinking about it. I was like, well, yep, but you know that, like, for instance, a lot of people that are sexually abused when they're kids, they go on to become sexual abusers themselves, right? Like, a lot of the abused become abusers. I think that the argument that they were making was like, women have been oppressed, and so if you give them power, they will be more effective. They'll be better at it because they're not going to abuse the power. Well, just because power was abused against you doesn't mean that you won't do it either. I think that the history kind of suggests that that's not very predictive of that at all, right? So then why does it happen? I think the reality is that most people have no clue what they would do with real power because they've never had it and they never will. I don't think that you know what it's like. I think that the problems and the pressures that you deal with when you're in power are beyond most people's comprehension. Probably beyond my comprehension. I've never really had super big power or anything like that, right? It's the structure of the thing, right? It doesn't matter who you put in there. You tend to get the same result because the system is structured in a way that outcome is more likely. So the only way that you fix that is that you have to change that system. So anybody that's going into Washington and isn't making as a large part of their agenda things like Congress. If you serve in Congress, you cannot ever after that serve in the lobbying industry. You cannot be a lobbyist after being a congressman, right? They're not saying stuff like that, then it's pointless. Because they're not actually talking about it. Does Donald Trump doesn't talk about that kind of crap. Sounds like he's just going to come in and he's going to prosecute people and remove them from office and everything, and then everything should be great, right? Because then we'll have good people in government again or something. No. You got to change the system. You got to change the system. And don't be a change the system liberal. Don't be like we're just going to destroy the system and like remake something. No. We're going to make intentional, sequential changes and make a change. See how that goes for a little bit. Make another change, etc., etc. I was looking for something here. Hold on. That's a weird story. Bond skew is to the downside given massive addition in length. However, we need to start selling off first. Okay. So like, this isn't money supply, but this is unemployment rate versus the budget deficit versus the federal funds rate, right? So like, what's happening? Like, money is draining out of the system like crazy, and the government is running even more of a budget deficit at the same time, trying to prop the economy up. That's what's going on. Saw a better chart the other day that was like, here's money supply, and it suggests that we've got a ways to go. Insider trading is literally like the page name. Wait, oh, sorry. Wait, let me read back here. Imagine Nikki becomes the first female president. That would be a death blow for the woke. Well, oh yeah, because she would be like a warmonger. Yeah. Yeah, that's funny. Hidden Deep Online is an insider stock trading page that's a little well known. Know anything about it? Just I'm insider stock. Oh well, so I have seen there's actually a couple of places out there that are basically reading the filings, like when you're an insider and you do an action, you have to report it, and so there are systems out there that watch for these and also filter them to kind of say, this insider activity is interesting, right? So there's absolutely something to that. Now realize that there are people out there looking at this, so there may still be some edge in it, but you know, there is competition and so forth, right? And you're still kind of trading on like they have information and you don't, so you don't necessarily know why they're doing it, so it won't always work, right? And so that will kind of hurt your profits too. But you know, if you're trading stocks, it's absolutely something that I would look at for sure. For sure. Well, I can't find it anymore. Every time I talk about something like this, Zero Hedge will come in and they'll post stuff about it, but okay, so here's an interesting story. I want to read this. Pentagon responds to claims that Taylor Swift is a front for covert political agenda. The Pentagon on Wednesday responded to reports that singer Taylor Swift may be a front for a covert political agenda on behalf of the Biden administration. Pentagon spokesperson Sabrina Singh denied claims that in a tongue-in-cheek statement to Politico. As for this conspiracy theory, we are going to shake it off, referencing one of Miss Swift's songs titled Shake It Off. But that does highlight that we still need Congress to approve our supplemental budget request as swiftly as possible so that we can be out of the woods with potential fiscal concerns. Okay. The statement from the Department of Defense followed comments made by Fox News host Jesse Waters on Tuesday night. Was that a new high? Yay. And that's 16.5. So now I get to see, does it go or not? A significant break above 16.5 could get interesting. And the next kind of step above that is 20. Ain't too far away. Mr. Waters, during his show, Jesse Waters, I don't know who this guy is. I don't think I've ever watched his show. Questioned how Miss Swift had soared in popularity over the years, noting that her Sold Out the Eras tour has an economic impact greater than the GDP of 50 countries. And around for 4 years ago, the Pentagon Psychological Operations Unit floated turning Taylor Swift into an asset during a NATO meeting. What kind of an asset? A PSYOP for combating online misinformation. Well, has she been out there combating online information? I don't think so. I think that she just has the best social media team. Fox News host then cut to a clip from a 2019 conference. She then shared an image of Swift standing next to a go vote sign. Social influence. You know what? I kind of feel for Taylor Swift sometimes, because it does seem like there's all sorts of crazy stuff that happens around her that she wants nothing to do with and doesn't deserve. But she probably made some naive mistakes at one point, but I like this kind of idea. I don't know, man. I totally get for the conspiracy, like Uzi's not here, but I bet you Uzi could make a good argument for why she might be a government asset, or why she would be a good government asset, you know? Yep, Zero Hedge watches the stream and then posts whatever articles about what I talk about. It does. I'm telling you, man, he does. You watch. There's going to be, sometime today, you will see a story on Zero Hedge with a chart of M.2's money supply. This is going to happen. Happens every time. Especially when I bring up something about Bitcoin. Mr. Bragar told Business Insider in a statement Wednesday that her comments during the 2019 conference were taken out of context. This was an academic presentation at an open conference for discussing cybersecurity challenges, she said, adding that the conversation regarding Ms. Swift was an incidental example of a famous person to explain a social network analysis concept to the audience. This is a commonly used approach in academia to make theoretical concepts seem easier to understand. You know what? Like, my journey on the Taylor Swift thing has been so weird. Because first it was, why is she so popular? And this kind of smells funny. And then it was, oh my gosh, there has been all sorts of drama around her. Maybe she is like a covert narcissist or something like that. Like, how has all of this crazy stuff around her happened and everything? And then now I've kind of moved to, you know what? Like, she was just really famous and kind of like a young, naive person stuck in a really narcissistic world. So it's kind of like, oh man, this is there's a whole rabbit hole you can dig down on this. But in the movie Cars, okay, the main character, Lightning McQueen, is like very self-centered and I would say narcissistic, right? But is Lightning McQueen actually a narcissist? No, he is not. But part of the reason probably why he behaves that way is because Chick Hicks is a narcissist. He's straight up classic narcissist. And he's in a very close competition with him. And so because of that, it kind of rubs off onto him, and Lightning kind of makes mistakes, and it even kind of affects his personality before he kind of has a change. And I wonder if for some celebrities that sort of thing happens, that like when they're young and they don't 100% know what's going on and what the best decisions are to make, they kind of make mistakes in that direction. And then as they get older, they kind of realize what's going on and try and avoid falling into those pitfalls, because it certainly seems to me like Taylor Swift goes to much greater lengths to avoid that sort of stuff now, other than trying to push the political agenda, which is, whatever. Why? Oh, that's a good question, Octavius. I think because I don't really know when I should be pyramiding. I think I think what I've practiced when I'm managing multiple contracts is add a few contracts at the beginning and then take them off so that my break-even point is really far away, and then just try and let that last contract run. When, from what I've learned, pyramiding is a really effective strategy. And I don't have any real rules about when I would pyramid. Would it be when I'm considering taking, when would I consider that as an entry? I'm already long and I would consider that an entry? Then I should pyramid? At the moment, I'm not 100% sure that we've truly broken out, though. You know what I mean? Like, we did break 16 half, but it wasn't that dramatic. So I'm kind of a little bit afraid of this sort of thing that was like, they breach it and you get distribution just above the high and then it sputters out. I'm a little concerned about that right now. So, because I'm kind of thinking of it like when I was talking about the breakout, I was kind of thinking, well, above 16 half, then there's 20, and then who knows how far they could go. Like you could start to see a lot of higher time frame players like really get blown out here, right? But then I think about that and I'm like, are we really going to go up to like, 112, 22 or something like that? That seems a little silly to me at the moment. So I'm just going to sit on it for a little bit. But if you have any ideas about when we should pyramid, I would be totally open to hearing it. Normal people making mistakes, shocker. Yeah. Yeah, well, it is. It's really like, I see it on YouTube. So something that I've spent a lot of time thinking about is like, what is different about me? Like, let's just be frank. I'm not trying to say that I'm like a better person than other people, but I have approached my YouTube channel and the little success that we have had with the YouTube channel a lot differently than most people do, haven't I? I think that it has to do with my ADHD. Like, one of the symptoms of ADHD is, or let's say, neurodivergent people, is a heightened sense of justice. So when I see somebody abusing their audience, or when I see somebody committing fraud, I get a lot more upset about it than the average person does. And so I've probably like overly conscious about that sort of a thing, But when I look at it, I just see all of the pitfalls. I'm like, yeah, we as people are just not equipped to deal with these problems. Like, that was a pretty good tick right there. Like 38, 88, and they busted through it. I guess maybe I will. Well, I don't know. It's probably too late now. The S&P 500 hasn't even opened up yet. Or it's just opening up. One symptom is literally just carrying more, I swear to you. It actually is, though. A neurodivergent person is less capable of looking at the context in this situation and realizing when it's not really actually a huge deal, even though they may be actually breaking the rules. Man, that is big.
So, yeah. So I've kind of gone through that journey with Taylor Swift, wondering like, okay, like what's going on here? Maybe probably it is just that she was a normal person that made mistakes early on in her career, because you would literally have to be trained to deal with these sorts of things. And she's just really, really lucky that she has a really amazing image management team. Where are you supposed to look? Right here. So you see that number right there? See that that column of blue? That's it's a simmed position, just to be clear. I kind of been taking a break because I took a lot, had some losses last week. And I wasn't super confident on this one. I could trade over here. I'm kind of thinking about it now that we've pulled back, but I digress. That's how much money you're making. 375 right now. So that's where you look. So you're watching this move up and down. Everything else, so when I'm trading, my eyes are right here. And then everything else I'm kind of catching in my peripheral vision. This is how I do it. Entrepreneur Empire, good morning, Seth. Good morning. By the way, welcome to the stream, Soren. What we're doing is really complicated, but it's not actually as complicated as it looks. Once you've been doing it for a month or so, watching it, your brain just figures it out, man. Your brain just intuitively sorts the system out and will understand kind of what's going on. Alligator says this market needed a trigger. I think so. Because basically you've got momentum firms in here long, and they didn't breach the downside. So now it's kind of coming back up, and we see if they make a higher high or not on the daily. I think, though, like if you try to extrapolate this out, right? Well, I need a smaller. So I'm just using regression, right, to extrapolate it out. So let's say a week or 2 weeks from now, if we're at new highs, I think that you kind of got to start thinking about the recession thing a little bit more seriously. Dang, I didn't, I was saying I was thinking about taking it down here, but I thought I had more time. I'll at least arm it. Do you only trade? No, I trade 10-year Treasury mostly. Dude, that looks like that's going to keep going, man.
Okay, what data provider do you use? Do you find a difference between them? By the way, I have a quick question for you guys, because there's like all of a sudden 4 new guys pop. We have like a really tight-knit stream, and I know most of the people that are on here, so when I see a new name, like I immediately recognize it. It's kind of weird to get 4 all at once when there's like YouTube. Like, did you see it on the front page of YouTube or something? But, okay, I use Rhythmic. There are differences between data providers, but they're not as significant as you would think, and kind of like where the differences are kind of odd. So like the thing that Rhythmic gives you, as Steve says, he visits on and off. Well, thank you. Yeah, everybody hit the like button, and maybe it sets it up to YouTube. So the unique thing with Rhythmic is that it gives you like all of the points. Like you see how far up here I can see on the level 2. That's you can't get that with CQG. CQG like limits you to like 10. But on CQG you can pay to get like index data. Like you want to see the tick index and things like that. So like there's 2 differences between them. But if I put like if I have Rhythmic and CQG next to each other and I'm watching the 10-year Treasury, there are differences between them, but like they are inconsequential. So you know, that I wouldn't stress too much about which data provider you use. There are some that are like clearly better. Like, who were we talking about the other day? We were talking about them. IQ feed, for instance, a lot more expensive, much more quality data. So, Trading Technologies, if you use their platform, the data feed that they get is like the best. So there are differences, but like I'm guessing you're asking that it's like I just sent my money over to AMP Futures to open an account, and now they're asking me to between Rhythmic and CQG. It's personal preference. So I like Rhythmic because I get all of the level 2s, all of the level 2 levels rather. And I can send the data to multiple applications because Rhythmic Trader Pro has a plugin mode. So I connect with Rhythmic Trader Pro, and then it forwards the data to both Jigsaw and NinjaTrader. And that's how I'm able to have this really complicated setup. Can't do that with CQG. So that's why I use Rhythmic. That doesn't mean that the Rhythmic data is like objectively better than CQG. It's just that their setup matched what I wanted to do better. If I was like only using NinjaTrader, then you kind of have to use CQG Continuum, and it would be just fine, right? If I wanted to trade indexes using internals like tick, then I would have to go to CQG. Uh, 2800 MBO and ZT3 ticks above. I'm a little frustrated because I did arm the account but I didn't get in, and it just like it slipped so far there that I really don't think I can do anything now. It is kind of forming a liquidity hole, so I really don't think I should do it. I missed a trade there where I think I could have made almost 20 bucks, so it's okay, I guess. There will be more opportunities next week, I think. This does sure seem to me like we've had downside action lately, right? In the treasuries. This blows all of that downside action out of the water. Buy is really, really insanely strong. Which is kind of interesting because the skew is to the downside. Like if the treasuries sold far enough to get below like 111 even in the 10-year, you could see like really ugly selling. But that's not what happened. It's like it's not backing off here, man. So we've been caught in this situation before, haven't we? I think I should just focus on this one. I think that I should just say I missed it and focus on this one and getting this one out at the right time. Because you know that as soon as I hit at 3925 that they're gonna... Can you believe we were at 4 at one point today? Like, what? So that's an 8 basis point move. A really, really big move for a day would be 15 basis points. So we're getting into the big range, the big ranges. You know what? This daily chart right here is messed up. I need this one. This one should be on price change. There we go. So we're not beyond yesterday's range yet. Get that. Okay, so this is actually a little bit suspicious to me. There was stacks at 23 half and 24, right? And then they disappear when they tick back down. And there's been some pretty big distribution here. That does suggest to me that this thing is ripe for a pullback. It has been a long trend too. I mean, this has been trending up for the last 30 minutes. I see people posting the market on close price before the close. No, well, not price, but the amount of orders. Yes, 1.5 million sell side. I wanted to learn more about this and currently do not know. Okay, so I have a video about this actually. Let me find it for you. It's an older video. Yeah, it's an older one, so I could totally see you missing it. At least I think I have one. I swear I do, though. Oh, yes. Here it is right here. You know what? I haven't seen this in a long time, so I will watch it. We'll watch it together. How about that? To talk about a market event that we've been seeing very commonly every day at 3:50, and this is starting to be talked about more and more. I'm starting to see videos about it, people calling it the murder algorithm, and what the heck is this huge increase in volatility at 3:50 Eastern time every day, and it happens literally on the dot. Well, I'm normally focused on treasuries. I'm a little bit new to equity indexes, although I'm trading those a lot more. So this was information that was new to me, but what is happening is this is really a news event. What happens is there are market on close orders, and they kind of keep track of what are the imbalances between buyers and sellers that want to buy and sell at the close, and they need to adjust the prices to accommodate everybody. They actually explain this pretty thoroughly, the whole process that the NYSE goes through. Because they want people to know about this. So here they say, designated market makers have obligations to maintain fair and orderly markets and facilitate price discovery throughout the trading day. Obligations that extend to the auctions. One of their obligations is to facilitate the closing auction process, which includes setting the auction price at a level that satisfies all interests that is willing to participate at a better price than the closing auction price, and supplying liquidity as needed to offset any remaining auction imbalances that exist at the closing bell. And then down here, they have a timeline. So at 2 o'clock, imbalance information is published to floor brokers. Then at 3:50, the cutoff for market on close and limit on close order entry, modification, and cancellation imbalance dissemination begins, except for legitimate
top
errors.
Of the hour, Minneapolis
So
Fed
what is
President
happening is that
Kashkari delivers welcoming remarks and participates in a fireside chat at the bank's annual Regional Economic Conditions Conference.
Here in the news clock right there.
There will be a Q&A.
At 3:50, it is basically a news release where information about the market imbalances going into the close are released. Now, your first question might be, well, I've been watching the close and this has never been a significant thing. Well, that's true. And so there's this great story, and I'll have the links to all this in the video description below, of course, but there's this great story on Benzinga where they kind of explain what's happening. But the basic gist of it is that the NYSE floor is closed. So it used to be the traders were pricing in that imbalance already because they kind of knew what was going on because they were talking and seeing each other interact on the floor. Now that the floor is closed because of coronavirus, they're not getting that information, and the market is not doing a very good job at pricing in that information before it comes. So when the information hits, the markets have to readjust to that imbalance, and that's why you see this increase in volatility. In fact, if you look at the screenshot above me, that's a picture of the event that we saw today. A member in Discord provided it with a picture of their book map chart. But you can see the liquidity is pulling. So they're treating it like a news event. So my recommendation is that you should treat it like a news event, just like you do in your regular trading. I'm sure there are people that are actually trading this and making money, I'm
active,
sure.
And we have pinned it to Fed's Kashkari's entry in the calendar for anyone who does want to register to watch live.
Most traders tend to avoid news events. That's what I've been doing. I usually don't trade the close, but 2 or 3 of these days I have been kind of sim trading around that time, and I just get out between 3:45 and 3:50 before the event happens, and then whatever happens and I don't have to worry about it, because you got to realize they're pulling the market liquidity. If you're on the wrong side of that, you're writing the whole thing, because you're going to be very difficult to get filled. Who knows where your market order is going to end up hitting. So of course, again, I'm not an expert on this issue. I'm sure there's
Didn't realize I was showing you
that
your
we're
screen
going
this
to learn
whole
about it. So if you have more information to add, please add it in the comments. I will see you guys when I stream in the morning every day, 8:20 to 10:30 Eastern time. And until then, stay profitable, friends.
Okay, so there was a note. Okay, I think I've gotten a lot better at that sort of thing. Haven't I?
But that was basically the gist of it, right? 350 is the cutoff. You can't submit market on close orders after that. So that's when you get the imbalance. But sometimes you will get a big imbalance and then it does create trend after that. So like be out for 350. And then after you get the number, if it's a really big number and it doesn't look like that had been priced in from the most recent trend, then you can try taking it into the close. Should have listened to you when you told me back in 2020 I'm loving bonds a lot more. Well, bond volatility has been great this past year, hasn't it? So that certainly helps. But they're just a lot less random than equities, right? That video was 3 years ago when it was during COVID. And the NYSE was closed because of COVID. Isn't that crazy? It's pretty great when I look at it because all the videos that I made since then are the best videos. I had some good stuff before that, but these newer, most recent videos are way better. I haven't made a video in a long time. I need to work on that. Haven't been super motivated to make videos lately, unfortunately. Wow, was it at 395 that I was like I should have taken a trade? Yeah, because it was around 18. Wow. And 20 it is interesting that they got that big order at 22. But I read that really well, didn't I? I said they're putting stacks here, and that actually looks a little suspicious to me.
At the top of the hour, Fed's Kashkari does welcoming remarks and participates in a fireside chat at the
doing that sort of a thing
economic conditions conference
after a really long trend is really suspicious.
So keep in mind, we have also pinned the registration link to this event.
I talk about this in my video about large orders and spoofing. Right? When you're seeing that stuff at the beginning of a session, I pay a lot more attention to it than if it's like at the end of this, the end of a trend or at the end of a session. Because why would they be doing that sort of a thing after we've already risen freaking 20, 25 ticks or whatever, right? Doesn't make very much sense. They are messing with it when they're doing that. Versus when it's at the very beginning and nothing's going on, I'm kind of like, there would be no reason to do that unless maybe you were trading a really big order and you're trying to stir up liquidity. Oh yeah, let me turn off the new squawk. So now that it's come back, do I take a trade in here? I could. Actually, I could. I'm a little scared to do it though. So I'm only getting 10 ticks back, right? 925. So I don't like that. I think for me to justify it, I would need a little bit better risk reward on it. Now there's two big orders there. Well, so one of the things that I'm looking here is like, when you get a big trend up like that, and then I want to see, like, is it just settling? Like the pressure came off, so like they stopped executing the meta order, right? So I should see cumulative delta be flat through here, but that's not what I'm seeing in the 5-year. I'm actually seeing pushback in the 5-year. The 5-year is outright selling. So that makes me a lot more cautious about taking a trade. If it was going flat through here, then I would say, okay, they might do another leg of the meta order later, like in 45 minutes. So, but that's not what I'm seeing. I'm seeing they're outright selling the 5-year now. Like, they think the spread went too far or something like that. I'm going to type something on Reddit here. Okay, we did bust through 22, so now I'm definitely kind of like wondering, because there was a breakout at 16.5, right? And then there was a breakout. Well, let's say that there was 20, but it was like 22 was where we had like a lot of stuff, and then it kind of extended. So for them to come back to the scene of the crime and come back below that is a little concerning to me. So I think on this trade, first of all, probably already worn out my welcome on that and should have taken that off long before this. And over on this side, I'm going to stay out. So it may still give us another opportunity, but I'm, that really messes up, I think, what I would have been looking for like a pullback sort of continuation trade. Okay, yeah, they came back up really fast. Like almost as soon as they dumped, which is kind of funny because where I dumped was just kind of random. But this is interesting. Is it happening because of the? No, it doesn't seem like it's the dollar that's doing it. I'm seeing oil come down at the moment. By the way, oil seems to be still moving very, very wildly. The S&P 500 peaked there too. That's curious. Did I miss something? Did I miss something like 45 minutes ago? $15 minutes ago? Credible bid continues, yada yada yada. No, I think that there must have been somebody sold. There was a counter meta order, and that counter meta order has ended. This must be what's going on. Sometimes I feel my strategies shouldn't be designed to find the edge in the market, so you should be designed to prevent me from making stupid mistakes. Well, again, when we're talking short time frames, you got to realize that your ability to really truly find a strong edge on short time frames is extremely limited, right? I can say, all right, we just got a piece of information that will really drive order flow long in the treasuries, right? But that doesn't necessarily tell us what's going to happen in the next 5 seconds, right? A lot of that is just random. And since we're not at the beginning of the queue, we're not the fastest, we don't necessarily have an edge there. So I think to some extent you are correct that a lot of this is kind of avoiding doing something stupid. And you can kind of see how most of the time I spend talking myself out of taking a trade, right? I wanted to do something and it was too late and I was too afraid of the pullback to take the trade. I was too late, and at that point I didn't want to take the risk reward. So I was writing something on Reddit here. You are correct that from a fundamental perspective, an ETF does not change anything. Bitcoin is still a purely speculative asset that is heavily manipulated. However, do not make the mistake of assuming markets are informationally efficient. Contrary to popular belief, market prices do not accurately reflect all available information, which means sometimes fundamentals change and the market doesn't reflect it. Sometimes fundamentals haven't changed and the market still moves. Price is merely a reflection of buying and selling in the asset. If you buy something, that has some impact on it, regardless of whether there is any informational content behind the trade. Should put the comma there or not there. If you buy something, that has some impact on it, regardless of whether there is any informational content behind the trade. The introduction of an ETF may not change the fundamentals, but it will have an impact on order flows. ETFs make the Bitcoin market available to a larger audience. That could mean billions of dollars that get allocated to Bitcoin over several months. It also generates headlines and attracts attention, which will also tend to attract capital. The risk of ETFs attracting more flows to Bitcoin presents a significant near-term risk to shorting Bitcoin. I should add. Do you get that post, Russ, where you post something and read it out loud? Do you? No, absolutely not. I don't get that dopamine rush where you just feel great about yourself for accomplishing things ever, about anything. I only read it back to myself because I make so many mistakes. And we'll just post it and then go back and be like, oh, I made a spelling mistake here and here and here and fix it, you know? Well, 45 minutes left. It is going sideways here. It actually did not pull back as far as it could have. They could have made it all the way back to 20, and I think that that's still a risk here. There does appear to be some liquidity below us supporting us that might be difficult to get through, though, if they were to sell. So I was just thinking, we were having this conversation in Discord about, okay, at what point does this turn into outright recession fears? And Alligator said monetary policy requires time to fully transmit to the economy. Isn't it so weird that we know that monetary policy is lagged, and yet the market seems to have a hard time pricing in what we know should happen based on current monetary policy? Like, everybody says that the market's ahead, but it doesn't seem to be the case at all. It's like the market really needs to see it kind of going in that direction with the data before they believe it. Excuse me, I should have muted myself before I coughed. It probably blew your eardrums out. Okay, so something I needed to talk about that I keep forgetting about. Houthis undeterred after U.S. coalition pummels over 60 targets with Tomahawk missiles and airstrikes. So I wanted to talk about this because I learned a couple of things about this. You know, there's been a war going on in Yemen for several years now. Basically, the Saudis have been kind of trying to drive them out because, you know, it's on the corner of Saudi Arabia. And basically, what's happening is these are basic, as I understand it, practically desert nomads, you know, just hiding in caves and things like that. And so it's been very, very difficult for Saudi Arabia to root them out, even though they've been doing airstrikes for a long time. In other words, the United States will have a very difficult time securing security in the Red Sea without putting boots on the ground in Yemen. So that was a critical piece of information to learn, because that kind of suggests to me that this situation in Yemen will just continue to escalate. That it will just continue to escalate, and that at some point you may see, or maybe not U.S. troops, but that you will see maybe Saudi Arabia troops on the ground in Yemen at some point. Wag the story, dog story, to deflect attention at international court? Maybe. I think that the Houthis can't help themselves. I think that these are ideologically determined adversaries that have found an opportunity to have an outsized impact on the world, and they have backing from Iran. And as long as Iran is able to keep them supplied, that they will continue to try and create chaos. And that there's absolutely no real thinking behind the timing of it or anything like that. It's just like, you know, a dog that chases after a car that drives by. They wouldn't know what to do with it if they were successful. This is an extension of the unification of Yemen. Well, IQ seizes all ships pass except for Israeli ships. So, yesterday, a ship that was coming from Iraq and heading for Turkey was basically hijacked by Iran. So that had nothing to do with Israeli ships. There have been ships that were not Israeli that were attacked. But I don't know if it really matters that it's just Israeli ships. Nobody wants to send their traffic through there now. Was that the ship? Oh, you know what? You might be right about that. That was... I don't remember the older story about it. But is that relevant to either? I think you're kind of saying that, like, well, that justifies it or something like that. I don't care about that, right? I'm merely stating that the risks of escalation are very, very high. Like, you're seeing that action, and knowing the history and the geography of Yemen kind of suggests to me that there could be escalation and that you could very easily draw Iran into direct conflict here. See if we can find more information about this particular ship. St. Nicholas tanker. Oh, look at that. There's like a website called marinetraffic.com that will tell you everything about it and what has happened to it. And what it looks like and how much it's worth and stuff. That's very interesting. So I remember this story now. I remember when the United States, like, seized an Iranian ship. And I just don't remember the details of it. It was like Iran was trying to get around the embargo, and so they did something about it, but it was kind of like they're constantly getting around the embargoes, so like it wasn't like the US wasn't actually that serious about it or something. But either way, major shipping companies are deciding to go around Africa instead of through the canal. So, like, it's a really big deal either way, right? Of course, the United States could decide that it's just not very committed to it and do a couple of, like, you know, they did do attacks, right? And then, you know, they stop and everybody just forgets about it. I don't think that's probably the case, though. I think that the United States, I think that the foreign policy establishment in Washington is like hair on fire right now. Seeing global trade disrupted is like a major threat to the US-led world order and I don't think that Washington will put up with it for very long. Yeah, we don't get very much stuff through the Red Sea. Well, I mean, it's a huge deal for Israel, for instance, right? Just that alone is likely to cause the United States to step in and do something. It's just that they haven't been very, like, the leadership behind it has been a little lacking, right? That's why you're seeing all of these fund managers saying that, like, this is like one of the most dangerous geopolitical environments they've ever seen, even though, like, people at home kind of are like, you know, think that everything's hunky-dory. You know what Reddit really hates is family vloggers. Whenever there's a thread that's like, what's something that you hate? Or, you know, like, it's always the first, the top response. So they did come back down. So now they're kind of more in a spot that I was a little bit more interested in, right? Like, now we're really close to where I said I should have taken a trade and I didn't. There's no way that I would have reversed that, though. I'm going to keep my chair a little bit more upright today. So I just feel like sitting up straight for some reason. Suppose that if I really wanted to trade it, this would be the spot. 20 is not a bad place. I don't like how much time I have left now, though. Maybe I could get 9.4. Seeing Bitcoin take a little bit more of a dive here this morning. That's significant. It's coming back to like January 7th levels, so I wouldn't say it's a huge deal, but somebody must be shorting it. Oil is taking a big dive there. That's curious. Like, it was kind of big before, and now it's just going even further. I mean, they've got a long ways to go before they're, like, below today's highs and everything. Man, oil is, like, is so crazy. Look at that on the, like, the volume profile chart. Like, that's really wild. Kind of feel like the right margin should be more. So it wouldn't be crazy for them to go all the way down to 70. Just based on the volatility of this week and everything, but they may be finding some support here in oil. In the Treasury, they got a pretty decent pullback there, but the yield curve didn't actually shift back, so that's also interesting. Top Gun 3 in the works at Paramount. Oh boy. Kind of looks to me like it was like a short came in briefly and then it just fell back into the hole. The 30-year, the selling was in the 30-year. The 30 years sold it really hard. Look at that. 30 years sold it really hard. They almost went negative delta on the day in the 30-year. But if you're steepening, you're going to buy the 5 and sell the 30. So that maybe means that you can maybe discount that, sell a little bit more. So at 22, a buy isn't crazy. The risk reward is kind of a little, it would have been better at 9.4, right? Oil analysis is very difficult. Can we? I don't know. Thing is I didn't see a headline about it. The way that oil is moving kind of suggests a headline to me, don't you think? I could be wrong. But you're right. I'm learning a lot about it every day. You know, like I learned a lot about the whole situation in Yemen and why it's going to be a little bit more difficult than just, you know, a few airstrikes and then the problem goes away, right? So, but oil continues to sell off, so I don't know. So here's the thread. What is something that we'll be using a lot of in the future that we won't have very much of? or that we're using, that will become a lot more scarce in the next 5 to 10 years. And this person says, white collar jobs. We started seeing a decrease with the offshoring of manufacturing, but that was fortunately offset by the rise of tech. Now tech is in a stable enough place that the number of jobs needed has stabilized. In addition, offshoring is increasing again for more white collar jobs as companies look to cut costs to maintain the profit growth they had during the pandemic. Most job growth today is coming from blue collar jobs, delivery drivers, rideshares, restaurant workers, handyman, etc. No, I don't know if I agree with that entirely. So the number of jobs needed in the tech industry has stabilized. As far as I can see, there is still a massive demand for workers in the tech industry. The problem is that they need more skilled workers. Like, they're not looking for people that just came out of a coding camp. They're looking for people that have been working for 10 years. So like if you have a 10-year history in the tech industry, like these people that got laid off lately at Google and whatnot, they're not having very much trouble at all finding new jobs. And in addition to that, the offshoring of tech jobs has declined. I still see a lot of offshoring your IT department per se, but for companies where the software development is basically the business, they're all finding that offshoring is not work very well for them. And I don't think that the AI revolution has really started. I think that at some point in the future, you're going to see like every company needs to have their own like AI farm of some sort of thing going on. And that will bring in a lot of jobs too. Okay, back to 18.5. So I said, hey, maybe 394 would be better. You might get 395. Maybe they're doing that just to say, are you going to actually do it, Seth? Look, here's the VWAP at 17. Pretty high probability they'll bounce at 17. Not that I would take a trade based off of it, but... classic car part websites. Here's another thread on Reddit of, is economic pessimism the media's fault? Probably not, actually. I really feel like what's going to happen is when March comes around, the economy is going to look pretty weak. Might not be a recession, but I think that the economy is going to be really weak, and then everybody's going to see, like, look, see, there was a problem, and you're trying to gaslight us into saying that everything is hunky-dory. I really think that's what's going on. Because all of the leading indicators I'm looking at says that we're moving into a period of economic softness. Wow. The deadliest blizzard in history occurred in Iran in 1972. In some places, over 25 feet of snow fell. Wow. By the way, well, basically like 47 of the 50 states are going to be seeing snow this weekend. You've got a big snowstorm going over the east and a new storm coming through over in the west. Having just experienced this snowstorm that you guys are getting over in the east, and it went down to the Gulf and picked up some moisture. So, like, this is a real storm. Okay, plan your weekend because there's going to be a lot of snow. I actually kind of was wondering if maybe today the action would be a little slow to start because of that, but yeah. Or you know, like it would go through very quickly and then it would kind of die down quickly. But I would say that this has been trading pretty heavily for Friday, right? I am kind of seeing signs of it slowing down though. I am kind of getting the flow that I wanted originally in the 10-year to maybe try and take a reversal trade, but like it's taken too long and I've seen too much questionable stuff in the other two to be bothering with it now with 15 minutes left. So no trades for me this week, which is okay. But I did miss a trade there though, right? I should have taken a short at 395 or should have taken the trade overall in the micros. I wonder if I had taken the micros, if I would have, you know, given up on it before it took off, before, you know, the e-money, because it did sit there for a while first before they broke a new high, right? So, I think I did miss a trade, but it's okay. I think we're going to see a lot of interesting action next week because of all this. Like, if we're opening above 16.5 next Monday, there's going to be a lot of interest in treasuries, and it's probably going to be to the long side. And we do get some economic news as well that will kind of drive volumes as well. Biden warns after strikes on Houthi targets, I will not hesitate to direct further measures. Okay. I don't know. It doesn't seem like anybody's taking this seriously. So a president just conducted military action and the internet is yawning at it. Public school maps erasing Israel? What? Oh, now I'm reading conservative websites. Distracting myself here. Getting back to 20. Still pretty decent. I mean, if you took the long down in here, like 9.92 to 9.5, $30. What is this? I've stayed out of the Republican presidential primaries so far, but I've seen enough. That's why tomorrow morning I will have something important to say. Don't miss it, says Rand Paul. Based on past remarks, he might not endorse anyone, though he's met with independent candidate Robert F. Kennedy. where he spoke glowingly about the latter's opposition to crony capitalism. Okay, update. It's none of that. It's something better. There was a brutal swipe, but it was directed at Nikki Haley this morning. All unleashed a nasty thread on Twitter about the former South Carolina governor. He's proudly never Nikki and hopes you are too. Of course he is. Based on her record in campaign, I don't see how any thoughtful or informed libertarian or conservative should vote for Nikki Haley. If you agree, let your voice be heard. I don't like her. There was a point at where I said, you know what, she might do better than we expect, and I think that she has. I think I was correct in that assessment, but then, like, the more popular she got, the more I was like, I really don't want her to be president, though. She actually said, I'm sick of talking about a Department of Defense. I want a Department of Offense. Eek. I wonder if he's saying this because he thinks that she's doing too well. That, like, he doesn't want Donald Trump, and so he wants Nikki to drop out as soon as possible so that there's a chance that Ron DeSantis can win. I kind of suspect. Wow, that was a long thread that he posted too. Very interesting. There's a lot of trade going through there at 18.5. That makes me want to do something. It's like they're still trading it while the dollar is like moving like massive here. Okay. You know what? It wouldn't surprise me at all to see like the exact mirror image of yesterday come through. That like we had this huge buy and then it settles back down to like where we started. Well, I don't think that it can come all the way back through, but they could end below 16.5. One of Wall Street's most downbeat equity prognosticators has done an about face. Okay. Forex Live, let's read this. The question on everyone's mind today is, why is the bond market rallying so hard? Was that cross our mind? I mean, it did rally hard. I wasn't necessarily surprised. I kind of thought that maybe it made sense and that it was maybe more technical in nature. Okay, U.S. 2-year yields are down 11 basis points and the federal funds now price in 164 basis points of cuts. One answer may be that indications for the Fed's preferred measure of inflation, the PCE report, are falling. Economists are extrapolating the details from the CPI and PPI and transposing them to PCE. The result is a number that's below the key psychological 3% year-over-year level. Based on details in the PPI and CPI reports, we estimate that core PCE price index rose 0.17% in December, corresponding to a year-over-year rate of 2.93, writes Goldman Sachs analysts today. Similarly, at Renaissance Macro, they say the message from PPI is that core PCE will not come in nearly as firm as core CPI did. Using the inputs from CPI/PPI, we estimate core PCE of spot 2% month over month. Over the last 12 months, its core PCE inflation is likely to come in below 3. They note that healthcare inflation measurements diverge in the two series. Healthcare services inflation is not running nearly as strong in PCE as it has been in CPI. There are differences in scope between the two series. This is an important reason why there is a growing gap between those two measures of inflation. The PCE report isn't due until January 26th, but it will be a critical input for the FOMC, which meets January 30th through the 31st. So this next Fed meeting is going to be really, really interesting, right? Because, you know, like it would be really, really weird for them to say, nah, there's no way we're going to cut interest rates, and then for them to do it in March, right? So I wanted to trade so much that I forced a trade, came to my senses, and got out. And I'd be down 13 ticks if I pursue. Wow. Well, I feel like I kind of picked out that this was falling apart at a pretty decent point. So, you know, the sim trade that I took, I could have gotten a much better exit, but I was still a pretty good trade. Right? I think that Octavius saying you should pyramid kind of made me kind of threw me off a little bit, don't you think? But it does kind of make me think, okay, what I've been doing lately is I'll take one contract, I'll take like 3 contracts and then take one off and kind of scalp it in the area and stuff. But maybe I should start practicing just pyramiding it every time until I get a hang of when I want to pyramid and when I don't. Because that is a move that I could have pyramided on. So, I don't know. You would have cleaned up? Yeah. Well, I don't know. How many would I have pyramided into, though? 1, 2, 3. If I started with one contract and kind of added them as we go, I think I maybe would have made double what I did, but it wouldn't be like crazy or anything. I don't know, man. It's just tough. I just don't really know a whole lot about, like, I can't think about any of my technical research that I've done that would give me any clues as to when it would really make sense to pyramid or not. There's definitely, from a fundamental perspective, if I'm expecting a trend day, then I could pyramid, but I don't know. Think about it. Do some research. I'm sure that there's got to be some research. Oh, maybe I can go to So what I would do is I would just add one contract at a time as it moves in my favor. So now I'm searching archive for any mention of the word pyramid. Is that something that they actually in the research have studied before? I think these books like The Art of Speculation and stuff talk about it. Cascading order? I'm not, that's not a term I'm familiar with. When I search for that, I just get stuff about CSS. Cascading means that futures contracts with longer contract maturities will be replaced by equivalent positions in shorter contract maturities? That can't be what you're talking about. Maybe that is what you're talking about. What, try legging into a spread trade? You talking about something different now? I don't know what you mean by legging in as it relates to pyramiding. I do think that legging in is an interesting thing, though. But I've kind of messed with that a little bit, and I didn't feel like that there was a whole lot that was to be gained from like focusing on that for a long time. Although I maybe could practice that over in here because, like in this case, I could have gone short the 2 and long the 30. Man, the liquidity in the 30 is not very good, is it? That's interesting. So maybe it just to 2 and 10. You need to leg into, say, 5 lots. Well, why are you saying legging? When you say legging, I immediately think spreads. You know, and in that case, I would just do the 5 contracts over here and the 5 contracts over here. One of the things is that pyramiding for me doesn't quite make the same sense. So basically, it has to go 16 ticks per contract per contract. So like let's say that I was trading a 4 lot. Let's say that I started with a 4 lot and then it made 4 ticks. Then I could add a lot. Right. And then it went 3 ticks. I could add a lot. And then I could start adding more and more lots as it keeps going. No, it's like averaging in. Yeah. But the whole thing is the whole question. Okay, so one way of looking at that is I need to trade 60,000 contracts. How do I do that? And I do know how to do that, actually. But the question here is I put 1 contract on and I've made a little bit of profit. Under what situation does it make sense for me to increase my exposure? But you need strong flow besides the P&L, yeah. But that's kind of the thing, is that seeing like really strong flow is kind of like actually, oh, you don't actually want to add more contracts there. You know? It's better to like see that strong flow, let it pull back, and then take another contract. So it's just like, let's just say, yeah, don't do it in a liquidity hole. Let's just say, like, the experiment that I think I want to do next week, maybe. If we have time, you know, because we maybe just be in good trades overall. But, you know, if we're not in good trades and we're just kind of messing around, I want to be like, okay, I'm going to take one contract over here, and I can scale up to a max of 4 contracts, let's just say, for the sake of argument. And where do I take them? Because honestly, like, the thing is if I think it's going to go up, why am I not just taking them all at the very beginning? Right? Well, with pyramiding, you don't just take them all at the very beginning because you don't have the margin to do it, right? You let it go up a little bit, and now that you have more margin, you add another contract. But it's a risk mitigation strategy. It's like, I'm not so sure, so I'm only going to take one contract, and now it's gone a little bit. Now I feel more sure, and I add another one. It's just that it having moved a little bit in a trend doesn't make me more sure about it usually. Decrease the same size tick differences between trades and plays a huge role. Well, there are things that do. So, like, for instance, if I had 16 contracts, if I had $8,000 in the account, then every tick is a new contract, right? Starts to scale up really quick. It's complicated because of the effects, yeah. It is. So, like, there's got to be some sort of mathematical. I have to get into like a mathematical theory about it. Who would do this? Well, I think that we should start with a back test. We should start with a back test. And work it out. I think the way that it would work, though, would be like, I should get really, really fat tails and have a lot of things that just I end up taking off at break even, I think. It kind of makes me excited to try and do stuff about it, because it is a new thing that I've neglected and that we could learn a lot from. There's got to be some books that might help in this respect, though. There's definitely something about it where there's got to be some math that helps me. Anyways, I'm over time. I will see you guys. I don't know if we're on Monday or not. Probably not. So Tuesday. See you guys on Tuesday. Enjoy the snow, man. It's gonna be crazy. Massive Treasury rally after PPI. Because it's President's Day on Monday. I don't know if I get it off, though. I have to double check that. But I'll see you guys Tuesday at the latest. What snow? Dude, if you're in the United States, it's going to snow. It's going to snow. Be ready. Okay. I'm going to get a foot of snow this weekend.